Hello, my friends. It's Robert Miner with Dynamic Traders Group with a brief video for our YouTube subscribers and Twitter followers. This is where I do a brief video looking at 2 or 3 markets to give you a little taste of what we give for our DT Report subscribers every week in much more detail. So I'm very much focused not on forecasting the future. There is no one in existence that consistently and reliably forecasts the future. I'm focused on actual trading. So as you listen to the material that I have here, as you'll see, we're looking for specific trade strategies and not forecasting what the future holds for us. And so that's the focus. And we're going to take a look at 3 of the markets that people on our YouTube channels and Twitter followers seem to follow the most: gold, ES, and Bitcoin. It's been about 3 weeks since I did one of these videos, and the one I did 3 weeks ago is on these same 3 markets, and pretty much everything is unfolding as anticipated with some good trade setups. So let's get started with gold. So this is a weekly gold continuous chart. And I'm going to give you just a really brief overview of what I believe the trend position is of the gold market and the immediate position. I do these big picture reports periodically for our subscribers that we look at quarterly, monthly data, weekly data, look at the big picture trend, big picture objectives, that sort of thing. I'm going to boil it down here for you in about the next 2 minutes. This is the weekly gold data. And without going into details, around 32.22 is the minimum probable price target based on the pattern position and the cycle position, all that sort of thing, longer term for gold. So we still probably have a ways to go with gold. And now keep in mind, that's the minimum, could go much beyond that eventually. A trade below the January low would void that. I would say that I've got it wrong, I got the cycles wrong, I got the pattern position wrong, my price target's wrong. But as long as gold remains above the January low, is that eventually the probabilities are at least that it'll reach at least 32.22. That said, look at our weekly momentum cycle has just turned bearish here in the last week. I'm recording this on the afternoon of March 6th, but a week ago, the prior week, the weekly momentum's made a dual look-back bear reversal. This was called an outside 3-close bear reversal week a couple weeks ago. So it's usually a pretty good signal, particularly when the momentum makes a reversal, that a weekly high is complete. But any decline should be a correction within a bull trend. Let's go to the daily data. This is gold daily data. And again, it's through, actually according to this, the morning of Friday the 7th. So through the 7th is that we're looking at this initial decline of a few days in Elliott Wave terms and simple corrective terms as a probable wave A, probably making a corrective wave B, been basically flat for 4 days here. And during that time, go down here to the daily momentum. The daily momentum cycle is overbought. I would not be surprised if today, by the end of the day, it made a bear reversal. It may not. The point is, a daily high should be complete today or early next week, and that should be a correction followed by sideways to down. Now, we don't know what's going to happen. We look at the technical position and say, when it's in this position, typically this is what happens. And we develop a trading strategy around that. Now, I would not myself develop a go short strategy, even though more than likely the gold market's going to be sideways to down for another couple weeks or so. And the reason is my focus is on identifying when this correction off the February high is complete. Because when that correction is complete, then there should be a fairly significant advance for several weeks, if not several months. So right now I'm in what we might call a holding pattern, trading-wise in gold, in that just waiting to identify when gold has completed this corrective decline, and then it resume the higher time frame bull trend. Right now, with the weekly momentum's bearish, with the daily momentum's bearish, more than likely that's dual time frame momentum cycles are both bearish. More than likely, gold's going to be sideways to down for a couple of weeks. So in 2 to 3 weeks or so, I'll really be focused on, if gold continues sideways to down, identifying the end of this correction to position on the long side. Well, really briefly, before we look at the stock index and then Bitcoin, as I mentioned when we began, all my perspective is from the perspective of a trader, not a forecaster. This is going back to 1993, but these are the most recent ones, 2018, 19, 20, 22, 23, etc., even into 24. These were double and triple digit real-time, real money returns audited for various trading contests that were sponsored by a brokerage company. So you can see here's 86%, here's 156%, the global futures. Forex trading, I really like trading the euro. It's a good trading vehicle. 39%, 60%, 70%. Again, on derivatives, which is mainly futures, and which is the ES is the main futures market that I trade, 134%. Only 41% for that period of time. The point is, again, I'm totally oriented towards practical trading strategies. So if you're interested in real-world practical trading strategies, then the information we have here for you is good, and the information we have in the DT reports is good for you. So that said, okay, now let's take a look at the ES. So this is the ES weekly data. You can actually see it trading here because I'm recording this the latter part of the morning on Friday. Since the December high has been essentially sideways to down, and that's what we've anticipated for this period of time, and have anticipated that all of this trading activity is part of a correction. We could look at it as kind of a potential ABC. It's not finished yet, probably has ways to go, or some sort of complex correction. The point is, we've been anticipating it would be a correction probably into mid to late March. Now here we are, we're approaching that time period right now. So if it's a correction, what follows a correction? Well, when the correction is complete, a resumption of the trend to a new extreme. And more than likely, that's what's going to happen here with the ES in the weeks to come. Now, here are some time factors that are spread out over a 3-week period of time. And the time factor in 2 weeks is really important, and that is the high to low. The following, that's the week ending March 21st, and then the following week, the week ending March 28th, is a simple low to low to low, and the first week in April is 100% alternate time projection from the December to January decline if we take it from the February high. So that's a fairly broad period of time. The two key ones here are in the week ending March 21st and the week ending March 28th. Those are the two key weekly time factors. In other words, more or less the second half of March to complete a weekly low. And more than likely, the next weekly low is going to complete this correction. Here's our weekly momentums. Weekly momentums are bearish. They're not oversold. It typically means there's another couple weeks or so of sideways to down before the momentum cycle completes a low. And notice how everything I say is typically and more than likely probably, because that's what trading is all about, is identifying the conditions with a high probability outcome. And of course, with trading, then we have to identify where the specific stop is that would void our trade and void that outlook, void that probable position. But for right now, probably sideways to down for another couple weeks. Looks like today the ES is going to just tag exactly this 50% retracement. But more than likely, this decline is not yet finished. Probably has another couple weeks to go. But then we'll have potentially an exceptional opportunity. And by the way, I hope you have my book about the election cycles, because this is exactly back in January 1st when I did the first quarter update for the post-election years, is that the market would be sideways to down into mid to late March. And that's a typical post-election year trend when we have a Republican administration, and it's just how it's worked out for the past 100 years or so, and it's working out that way again, on average anyway. So we're going to be alert here in the weeks to come. This is the daily data of the ES, and of course it's been down strongly from the February high. And here's our daily time factors that are comparable to those weekly ones. That's March 21 and 25, which would be very likely, if the market sideways to down into that period, to complete a weekly low. Now we can see daily momentum cycles have been oversold for several days. Of course, we know all the news that's been coming out for the last couple of weeks, all this nonsense about tariffs and layoffs and the federal workers in the U.S., and it's just wreaking havoc in the market because it's uncertainty. Markets don't like uncertainty, but while a lot of people think, oh, this is the beginning of a recession and all, more than likely it's not. More than likely it's just finishing up this complex correction that began in early December and is likely to finish in late March, and then resumption of a bull trend, probably to a new high. I don't know if that's going to happen, but that would be the typical outcome from the current position. So my focus right now over the next 2 to 3 weeks is to identify when and if the ES, the other stock indexes, get in a position, probably in the second half of March, to complete a correction that began with the December high. Now, the market may prove me wrong that that's not what is happening, but I'm going to be focused towards identifying if the market gets in that position. So we keep updating this twice a week in our DT reports. You might want to come along for the ride with us, because we've had pretty right on over the last few months. So let's be focused on this over the next couple of weeks. So this is a Bitcoin weekly data coming off of the November 22nd low. Now, I just did a really comprehensive report of all the Bitcoin trends going back to 2011 when Bitcoin was $2, and related them right up to the current position of the market. But if you've been following these YouTube videos, you'll know that I was looking at, off of this, I've got my cursor on the December high as a probable correction, which would be followed by an advance to a new high. And looking for that was the probability right up until about 3 weeks ago or so. Well, the market itself said that's probably not going to be the case. Look how I have this labeled. If you're familiar with Elliott Wave, I got a full 5-wave count off the November low, 1, 2, 3, 4, and 5 into the January high. What would that mean if that were correct from an Elliott Wave perspective? It would mean that more than likely Bitcoin's going to be sideways to down for 12 months or more. And boy, that's a lot different than what most people think about Bitcoin. I have a question mark on that. It just tags some key price retracements and some time targets to complete at least a weekly high, if not a multi-month high. But I have a question mark on that. So remember, we're not forecasters, we're traders. So there's just a trade opportunity this past week in Bitcoin. It may morph into something fairly significant. So let's take a look down here. We'll start at the bottom. Is that the weekly momentums this week will make a dual look-back bull reversal. Last week, they had been dual look-back oversold for 2 or 3 weeks. So they're in a position to complete a weekly low. Now, from my perspective, we want to take advantage of any weekly trend. Remember, we're traders. So I look for weekly trades, those that hopefully would last at least 2 to 3 weeks or more. And not this past week, but the prior week, there were 2 key weekly time factors for a weekly low. And so far, that's the exact low. was the week ending February 28th. So we have weekly momentum cycles oversold. We have a time factor. Last week, Bitcoin came down 2 weeks ago and tagged the 50% retracement. So there was a setup for a weekly low. Would it continue to a new high or not? More than likely, if I look at the longer term picture, I would say no, it's probably not going to go to a new high. But it's still an opportunity for a trade. Let's take a look at the daily data. This is the data coming off the January high. And boy, it's just a mess. It's all over the place here with a few days that were just really volatile. These are all news days. If I hit the C key, we have a little different perspective. And this is where it becomes interesting. Off of this January high, we have a decline, some sort of correction, and another decline into the February 28th closing low. So what are these lines that I have on here? Well, let me go back to the intraday data. Is that, first of all, remember I said that a week ago, Bitcoin was in a position to complete a weekly low. And a week ago, Bitcoin made a dual look-back daily momentum cycle bull reversal. So the go long trigger for a probable weekly trade on the long side was actually this day on the close. And that's Monday the 3rd, this past Monday. Crazy day. Again, it was a news day. Opened way gap up here and then closed just up modestly. Well, that was the trigger to go long because our trade strategy was to go long and close above the February 26th close. So we're long at that point with a stop below the prior week's low. That's the February 28th low. So keep in mind, remember, I'm looking for trade opportunities, not to forecast the future. However, we were long, stop below that low, probable net bullish trade for 2 to 3 weeks or so. If not, pretty minimal capital exposure, stopped out. You can use ETFs and you can adjust the shares to totally control your capital exposure. So here we are as of Friday. Friday is not complete yet, but we've been net long or net bullish, slightly at least since that point in time. The daily momentum did make a bear reversal today. More than likely, Bitcoin would be sideways to down for a few days. But if our weekly cycles are correct, if our timing factors are correct, if our weekly momentum is correct, any decline should be a correction and should not exceed the February 28th low. If it does, stops us out, small loss. But here is the key level. Here is the key level. If Bitcoin should close above the February 11th close, and by the way, this is the continuous futures data for Bitcoin, if it should close above 95,425, more than likely this decline is a correction. That's called a closing overlap. And if it should close above that level, more than likely the follow-through eventually would be to a new high. And I'm off on what I'm looking at as the probable Elliott Wave count at this high. So the market would be telling me that's probably not the case, probably is going to continue to a new high. So I don't know if any of that's going to happen. All as I know is I've identified what would confirm a bull trend. I've identified which would void a bull trend and get me out of that long trade with a small loss. And I had identified, as of the end of last week, a specific trade strategy, specific price to go long, specific price to where to put a stop. So you'll know the difference when people describe a market, whether they actually trade or not, because they'll say, well, we're bullish at this, or we're bearish at this, or they'll say anything other than a specific bull price, stop price, or bear price, a specific trend confirmation price. You'll hear generalizations from people that don't trade and want to act like they know what the future of the market is when they don't. Okay, that's my wrap on that. So right now we're just a few days off of the low from last week. We have a daily momentum bear reversal. The typical follow through is 2 or 3 days sideways to down. We're in the initial stages of a weekly trend, whether it goes to a new high or not. So we're in the very initial stages of an opportunity to go long if you're not already long. So that's how I'm looking at Bitcoin in the days and weeks ahead. Well, that's it for today, my friends. I don't do these videos on a real regular basis, so be sure and subscribe so you get notified whenever I put a new video up. And if you want to learn more about trading and the approach to specific practical trade strategies we have, check out our DT reports at dynamictraders.com. That's it for today. Robert Miner, over and out for now.